All right, completely unnecessary. Oh, hey, yo. Hey, hello from Kathmandu. What's up, Devista? Hey, good morning, everybody. Stop having fun. You're not allowed to have fun. Turn that fun off. Let's go. Hey, welcome to Forex.Today. Let me remind you that trading is risky, not appropriate for everyone. Past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Can you confirm you have sound? Yeah, all right, good, sweet. You're just like dazed and confused. You're like, what was that horrible noise at the beginning of the webinar? Yeah. Hey, nice to meet you. My name is Wayne McDonell. Devil worship. There's no devil worship in Metallica. Yeah, the drummer Lars was in some random like radio interview, and they asked him about the old days of the drugs and the rock and roll and stuff, and he's like, I think the last time I had a beer at a concert was, and it was like 15 years earlier. He's like, yeah, I think I pounded 2 beers at a show. I was just exhausted, but other than that, no drugs, no alcohol. Like, wow, really? Like 14 years ago, you had 2 beers. Yeah, devil worshiping Metallica. Or even Red Hot Chili Peppers. I saw them in an interview, and they drink green tea. And actually, that's what Metallica does too, right? They drink green tea. They drink like energy smoothies, and they get massages before and after the show because they're old. They're really old, right? In a Metallica concert, let me tell you, I've seen them like the opening set of their concert sometimes is like 9 songs in a row without stopping. That's like 40-minute, you know. So anyways, they're old men and they live on smoothies and green tea and stuff like that. And a lot of rock bands of age are like that now. They're businesses. Anyways, hey, you're a business. I'm a business. Let's business together. This thing called Forex. I've always looked at it as a business. Like I've said before, no accounts receivable, no accounts payable, right? Instant gratification. There's a lot of things I like about Forex as a business. The other thing is that amateurs don't think about down the road, but the idea that Forex is mark to market and you collect interest on top of your investments, it's really, really, truly an incredible business. And what I mean by mark to market is, let's say you own a bond, you bought $1 billion bond, and then things went bad. The market went bad, and you're holding this bond. Well, this bond offers a cash flow over a period of time and stuff. But all of a sudden, you're like, I'd like my money back. I mean, I get the cash flow thing, but what if my bond, issuer defaults or what? Or maybe I should just be in cash. Maybe you have bills to be paid and other things because the market's crashing. And you're like, I got to sell an asset. I need to raise cash. What do? I got to sell something. The reason you got to sell it is because it's not worth anything until you sell it. Same thing with a stock. If you buy Apple stock at 1,000 and it goes up to $2,000 per share, you're like, I'm so rich, but you're not rich until you sell it. Well, what if you sell it and then it goes to $3,000 a share? You're like, oh man, I could have just held it, right? Well, in Forex, when you hold your positions, you get paid the profit in real time. It's already in your account, second by second. Now you can pay. Now you can play with the profit. You don't have to sell out. Katie, the banks do. So, I mean, what a really cool thing. You get to play with the profit before you even get out of the position. Like, it's the most beautifully designed small business on the planet. It's really cool. right? Now all you have to do is look at it as a business and grow it and use things like, leverage properly, where you don't try to get rich quick. You try to build a lasting business. So over the course of years, you have an opportunity to, to grow your assets under management. You know what I mean? Like literally, like a lot of people start with $5,000, right? Let's say. I think you're doomed if you're going to try to turn that into $100,000 as fast as you possibly can. But if you did it over years, I think you could grow it and grow it and grow it and grow it and grow it. And realize, and here's the other thing I would tell an amateur trader, realize in your first, let's say, 1 or 2 years, even if you start to get okay at technical analysis, you need to admit to yourself you suck as a trader. You have to. You have to like humble yourself down. I say it every day, right? Stay small, stay humble. Because I don't know if you suck compared to me or compared to someone else, but you suck as a trader in year 2 compared to you in year 5, right? Your year 2 you is horrible in comparison to you in year 5. So why don't you slowly grow your account till year 5, ensure you get to year 5, and then be able to handle the larger account size and the larger lot sizes. And imagine your year 5 you compared to your year 10 you. Don't you want to get to year 10 and see how amazing you'll be as a currency trader in year 10? That's what you got to think about. I often use the analogy of restaurants. People throw a couple of $1,000,000 into a restaurant and update the kitchen, update the decor, print the menus, hire staff and a chef and a maitre d' and a whole bunch of waiters and waitresses. And you do all this kind of stuff and you buy all the food and you do all the marketing promotions. And then what? You pray for customers to show up. And you're like, I need customers to show up because I got everything on this. And if they don't show up soon, I'm going to just run out of cash and just won't have the cash flow. You'll have a beautiful kitchen and amazing staff serving 3 people. And you're like, man, I got 14 filet mignons in the kitchen and nobody's going to order this stuff, right? It all goes into the garbage, right? And what happens is most restaurants go out of business in the first 6 months. And I always say to myself, well, why don't they have enough cash to last at least a year? You need $2 million and a year's worth of expenses to cover, right? So my point is, get yourself to year 10. Get yourself to year 5. You'll be so much better. Why take the bigger risks now? Why have the larger lot size? Why try to get rich so quick? Right? And if you don't have any money at all ever, at least build the track record of success so you can attract money. Because there's money out there just sloshing around. You wouldn't believe it. Okay, so I do these sessions Monday through Friday here at Forex.Today, 7:30 a.m., which is approximately London lunch, a couple hours before the U.S. stock market opens. And today, let me see, beep, 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 beep. Well, we had CPI earlier. It might have been yesterday, earlier in the week. Yeah, I guess Tuesday is CPI day, right? Does that make retail sales today or tomorrow? Today. Cool. But you should just know that, right? What week is it? What day is it? Oh, it's the 14th. Well, we're right around that CPI retail sales number, right? I often think that way. People say, what date is it? And I'm like, well, NFP was on Friday. Well, we had retail sales yesterday, so we must be near the 15th. We're about the middle of the month. Like, I don't know what date it is, but I can tell you based on the news what it probably could be, right? So anyway, that's great. I mean, I'm not sure if there's anything else, but that's going to be the big one of the day. And you should see the pretty colors. Cool. Well, here's the retail sales, sorry, the CPI data. Let's see if I can even zoom into here. And then I got to turn this one off. think it's that one. I always mess it up. All right, so here's the post-news scalp. And the high volatility event-driven strategy. You can see I haven't even touched the fib since we drew it, right? So we're looking at this on a 5-minute chart. Over the course of 5 to 10 to 15 minutes. 15 minutes, guys, from the news. It did rise, so we know we want to look left. I think I drew that pretty close. Okay. You want to look left, but you also want to look at the sweet spot. Okay. Cool, right? How many times have I, or how long have I been teaching that basic high volatility event driven strategy? Yeah, forever, right? A real answer would be a minimum of 14 years. Yeah, 143 months. Actually, longer than that. I mean, that's just non-farm payrolls, right? So it's not like I made that up and then. But anyways. Oh, and by the way, you know the PowerPoint I use in the beginning of non-farm payrolls? That was from the first one. Like, I'm like, this is how you trade non-farm payrolls 12 years ago. There it is, made a PowerPoint. But anyways, so that's the basic strategy. And it seems to me that on a 15-minute basis, it was a 382 retracement. Okay. What Fibonacci extension does the 382 predict? One 618. Very well done, Brooke. That's right here. Cool, right? Don't break my heart, my achy breaky heart. Okay, cool. So that's the up. How many people agree that I kind of went, I made it clear, let's put it that way. I made it clear that around this area here, there will be bears. Anybody? That if there were bears, this is where they would put up a fight. We don't know how many and all that kind of stuff, but this is where if you did the scalp, you should be pretty satisfied with yourself up in that zone. It's just a scalp. What more would you expect out of it except to get to the next level of resistance, right? And the resistance, actually ended up being here and here and here and here. But we knew that before we got there. Okay. Cool, right? Now, if you were hoping, which is a little bit different of a strategy than praying, you would have maybe tried again off the 21, right? Expecting a move more like this. But you had to pay the penalty because that didn't work. So a triple top here. Isn't it funny how we just went right back to the beginning? When you're strange. Yo, what funny? It's not funny, is it? Well, this is why high volatility event-driven strategy has you take profit. Funny how? Like a clown, right? It's not why funny, Mickey. You have to say funny how. Well, it's funny because if you didn't do your job and you didn't take your profit, you suffered the consequence of breaking even. Cool, Joe. So put it this way. Next time you're in a high volatility event driven strategy, remember it's short term. What did I talk about a lot yesterday? That news is just news. It just adds volatility, but it's not likely to change the long-term trend of policy at the central bank unless the news happens to be out of trend and important enough and to change the policy at the central bank, which means the central bank would have had to have already have been worried about it. Okay. But you can see why it's a terrible opportunity to enter swing trades, right? Man, that banana was good. Almost tastes like chocolate. Mm. So try not to mix up your strategies, right? If it's a scalp, make it a scalp. If it's a swing, make it a swing. If it's a spot, make it a spot. Now, a spot trade to me is something that lasts the session. So like London Open to now, for example. New York Open around 9:30 to London close. Typically, you're looking at 30 to 50 pips, right? But when the trading, when the volume diminishes, you take your profits and run. Well, Joe, don't say hoping, first of all. You're not hoping. Your strategy is a better way of saying it. If you're going for the big up, as I have indicated here, now you said 130, well, I guess you're going for this stuff, but even then you're way off. Going for 130 now sounds like nonsense. All right, so let's change something. You're a swing trader. You can say, right, you've identified a bottom for the euro dollar around 122. And your analysis shows you that your target is somewhere between 125.70 and 126.70. Don't say nonsense like I'm going for beyond 130. I mean, no, let's really, I mean, no, don't even say it. You're not doing yourself a favor. No, I don't care. If you don't have analysis to back it up, then it's irrelevant. You're guessing. You sound like I think Morgan Stanley's the one that trades like that. When you see their analysis, they're like, yeah, 130 or I mean, come on. No. What does the chart tell you? The chart tells you you'd be foolish to expect to get this above 127 currently. And you don't want to be a fool. That's all I'm coaching you on. Give me the analysis. I don't care about anything else. Right? Really, it comes down to like, what does the fundamentals say? Your fundamental model, we'll call it. And what does the chart tell you? I just want facts. It might be your interpretation of facts. That's okay, but give me the facts. I don't care about your opinion. Give me your facts. So you're like, my analysis says that's the support. There's the resistance. I get the fundamentals to back up this trend. We're going long and strong. And I'm going to book some profits if we get to 127. And then after that, you'll have new pivots and new analysis and new fundies, new everything, and you can readjust. But okay, so I got to get you to think like a pro. Okay, good, right on. What the is going on here? Let's clean this up. Ish kuput. What do you think? Is Australian trade data improving? Or is this just a monthly swing? Huh? Is this a fundamental move? Or did people just buy it at the M2? Well, you have to decide, because the reason I say that is that if this move is nonsense, if it's a three-wave correction or whatever, the fall is coming. This is the mega sell zone. Okay? So you have to decide. Do you remember talking about this in here? It was like the last Friday of last month. And I'm like, look, there's nothing on this chart that says up, but if you were going to buy it, this was going to be it. And if it wasn't Aussie dollar, it was Aussie yen. It's the same thing to me, risk on, risk off. But I went through like 6 currency pairs, and I'm like, look, nothing says up except we're in a buy zone. How many people remember that? We went through one chart. I think it was every yen pair, right? Pound yen, euro yen, Aussie yen, Kiwi yen, everything, right? And I'm like, look, nothing on this chart says up. But this is where bulls would buy. So we have to decide, is this just bulls that are, finding fool's gold? Or are you backing this up with fundamentals? How would you explain this to a potential client? If you impress the client, they hand over $1 million of their money. That should be an exercise. Write a one-page paper and submit it to me. You know how many papers I write? It's ridiculous. I think I've written 3 papers in the last 2 weeks. Oh, wait, and I don't have time for that. Yeah, you're right. You're right, 8. So, is it even possible, let's say, or of course, anything's possible, but is it likely that this pivot profit zone and these pivots act as resistance? Okay. This fib, right? 50%. This fib, 618. I mean, this is going to be trouble, right? Chuck, the history of the RBAs, they actually tell you. They'll come out and they're like, it's only worth 92. That's that. See how we're at 78, 79 right now? There was a time when we were like, it must have been over 100. Over 100. And Governor Stevens at the time came out and said, it's only worth 92. Literally, the Aussie dollar is only worth 92. Fell like almost 1,000 pips, free money. Thank you, Governor Stevens. And then it hit 92 and started to bounce up because now they're like, it's a floor. If that's the bottom, it can only go up. So Governor Stevens came out and said, no, it's only worth 82. Now they're 1,000 pips straight down. Isn't that amazing? Free money. I'm telling you, just like free money. Yeah. Free money. Just gorgeous. Just unbelievable gorgeousness. So anyways, I did tell you 2 years ago, maybe, that the worst is over, in my opinion. And it wrapped around the bottom for oil, really. Back when we were, remember when we were trading oil from 45 to 55 and back down to 50, and then from 50 to 60, all that kind of stuff 2 years ago? I'm like, well, now that we found a bottom in oil, I think there could be a potential for a bottom in all commodities and commodity currencies, just based on an improvement of global macroeconomics, because really that's what would be changing. And I said the worst is over for Europe. We got them past from the brink of collapse every 2 years. They're finally doing quantitative easing. Remember, the European response to the financial crisis was austerity. Remember that? They're like, well, let's make sure nobody has any money. That'll improve things. Well, almost every country in the Eurozone went bankrupt. You're like, oh my God, yeah. Right? So what happened finally, like 3 years ago? Europe's like, oh my God, the United States is back on board, right? And we're in the brink of collapse. So they decided, well, maybe this quantitative easing is a good thing. So so you have to put everything in context, where the European response was just wrong. Remember, after the financial crisis started, Jean-Claude Trichet raised interest rates. And like 3 weeks later, it wasn't even a scheduled ECB meeting. Cut interest rates. The world went, well, WTF? You just raised interest rates. Clearly, you don't know what's going on. They're like, we don't know what's going on, but we will smoke and we will talk about it. Right? And so Europe, in their genius way, said, well, let's get rid of the Frenchman and put in an Italian. Right, good. Yeah, great. So, long story short, austerity didn't work, right? So, quantitative easing. So finally we get, fast forward now, a couple of years ago, finally the worst is over in Europe. Europe is in bad shape. But they were doing now the right things, right? Like quantitative easing and stabilized the market and all that. They didn't have inflation, but stabilized everything. So that's why a couple of years ago, we're like, well, okay, now we need to keep our eye on commodity currencies, right? They don't look good yet. Australia had a trade deficit. And we're like, trade deficit? That's weird. Australia is an exporter. How could it be importing more than it exports? That's bad. So what do we watch? Australian import-export data. Balance of trade, right? Watch that. It's going to improve. It'll improve when Europe improves. When Europe improves, they'll start buying more, Bart Simpson t-shirts and beach lawn chairs from China. And then China will need to get industrial production capacity utilization of their factories up, which means we'll increase demand for domestic but also international commodities. And then you should start seeing Australian exports to China improve, and demand for the Australian dollar should pick up. But it's not going to happen overnight. So you're going to have to decide when you start buying the Aussie dollar. When? Huh? Aren't you upset you missed this move, guys? Look, this is it. Look, we're at like 105, 106. Pelosi says it's only worth 92. Boom! It dropped straight down. Where? 92. Then it rallied up, and we kind of bounced around. And then he says, no, it's not worth 92. It's worth 82. Boom! You're like, woo! In this period, I remember, and I don't know, again, the old guys in my webinars from years ago, and this would have been 14 and 13. I was doing things like I was short Aussie dollar, or let's say I was short Aussie against dollar, against euro, against pound, against yen, against Swiss franc. It was just like, it was funny. I was running out of things to trade against the Aussie dollar. Well, they're an exporting nation, Chuck. It's like, what does China do? Talk up the value of the yuan? No, they want, exporting nations want a cheap currency. Okay. So anyways, you have to analyze this now using your technical analysis and then also your fundamentals. Look at balance of trade data for Australia. This is what a sophisticated foreign currency trader would do, right? And talk about how the balance of trade data is going to impact the central banking policy of, right? Imagine you're schooling a potential client like, well, let's just sit down. Let's take Australia, for example, right? It's worth 30% less than it was just 5 years ago. But let's talk about how things have changed over the last 5 years. First of all, let's look at the balance of trade historically for Australia, going back the last 20 years, and then more recently since the financial crisis. This data may show us there might be an opportunity to invest in Australia. So historically speaking, Australia has a trade, right, surplus. They trade more with the world than they buy from the world. So they sell stuff to the world. In particular, the two major exports of Australia is iron ore and coal. They also have a lot of gold, diamonds, timber, some, not really. I'll take the timber back. Beef, wine, natural gas, and cheesy teenage television shows. Okay? So they're a major exporter. And we've seen that historically they export a lot, but during the financial crisis, when global demand for all goods, not just in Australia, all goods everywhere fell. And this was obviously because of the financial crisis. Well, over the last few years, things have been improving. Let me show you the data. Blah, 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 blah. Now, the Reserve Bank of Australia looks at this data and then adjusts their monetary policy accordingly. Blah, 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 blah. Give me your money. I have an opportunity to trade. Let's get rich together. Right? So, what do you think of this? Is this a bottom? Is this an opportunity? What do you think about the Australian dollar? It hasn't lost value for 5 years. Is this an opportunity for it to slowly go up? See what I mean? Which way would you point this, up or down? And then, of course, if global macroeconomics is improving, now you could even talk about the reserve currency of the world, the US dollar, which is the other currency on this pair, the denominator. Would you expect the denominator to increase in value or decrease in value? Now, we got to be careful because that's my opinion, right? Most people think, according to the people on TV, that if the Fed raises interest rates, the value of the US dollar will increase, not decrease. So your investor is going to say, oh, well, wait, I've heard that the Fed is raising interest rates and they're raising them before other central banks, and that we're on a steady path to increase them. So wouldn't the US dollar increase in value? You say, well, that's a very good point. Well, let's talk about how the US dollar is unique compared to most currencies. The US dollar is a reserve currency, and therefore, blah, 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 right? Isn't this great? And they're like, oh, my goodness, you should trade my money for me, right? Yeah. That's where you got to get if you want to go pro. So I don't know if you think there's an opportunity in there, but that's how you put it together fundamentally and technically, right? So are you a buyer of dips is the question. And you say, well, now, oh, of course, Wayne, now after that big speech of yours, I'm totally a buyer of dips, except you didn't buy it there. And then, of course, now people without longer term views, without fundamental analysis, they're thinking, oh, look, it's been rallying like crazy all week, right? What does an averager do? It's been going up all week. I think I'll buy it. Right at the weekly profit zone, right at the monthly pivot. No, I think I'll buy. And of course, what happens to them? But think about it. Somebody's buying it there, but someone else is also going to sell it there. And they have an exchange of foreign currency. What I call it is a liquidity event. So amateurs, every time they pull the trigger, it's a liquidity event for a professional because they have to sell to somebody. I mean, think about it. How do you offset a currency trade right at resistance? Somebody has to buy it, right? Right? Because an amateur's looking at this and going, oh my gosh, look at the price action on this. It's crazy. Buy, buy, buy. Yeah, buy, buy, buy. Like Backstreet Boys, right? Gone. Like, think about it, right? Somebody has to buy it from you. If you're taking profit, you're like, okay, I want out of this position now. Somebody has to buy it from you because you're now selling it, right? You bought it earlier, so now you're like, I don't want it anymore, so now you got to sell it to somebody else. That's why bulls actually sell at resistance. Bulls sell at resistance because they bought it at support. So even a bull's going to sell it there, but what's a bear going to do here? Sell it. Well, if they're selling and a bull's selling, well, then the bull needs another bull. They need to sell it to somebody. So anyways, whatever. It's funny though, isn't it? So, when I first started coaching people a long time ago, when I first started coaching people, I saw a common theme, and I never knew where it came from. I think it was in somebody's book, but I don't even know. There was all kinds of bad habits, like people were told, wait 3 candles outside of resistance and then buy it. And people would lose money on the pullback, and then it would go up, and then the guy would tell you, wait 3 candles and then buy it, and then it would fall and people would lose money. And then wait for it to make a new higher high, wait 3 candles, right? And then buy it here, right? And it was common knowledge back then. Yeah, it had to be specific. So let's say you wanted to buy it here, right? You had to wait for it to break the resistance for 3 full candles. People were telling me this because they kept losing money, and they'd come to FX boot camp, and I'm like, what is it that you do? And they're like, oh, well, you buy there. Well, I didn't know because I'm self-taught, right? So I never knew that. No, it couldn't be wicks. It had to be, yeah, real bad. You're right. Yeah, real bodies. And I'm like, really? I'm like, that's weird. I remember over time when people were telling me the way that they were taught to trade. Remember, no one taught me to trade, so I just kind of figured it out on my own. So people would say, no, that's not how you trade. You'd wait 3 full candles. I'm like, well, that's horrible, because every time I would do something like that, I noticed it fell. And I hated these pullbacks because, that's like 3 hours of trading on a 15-minute chart, right? Back then, I traded primarily on 15. So I hated buying and then losing money for 3 hours just to see it go back up again, right? Or when I lost money, I'd buy it, it would fall for 3 hours, and then it would fall for 3 more hours, and then I lost money. So I'm like, well, gee whiz, every time I buy it, it either falls for 3 hours or it falls for 6 hours. You see the logic here? So I said, well, when I decide I want to be a bull, I should just kind of wait for it to pull back. Because I know every time I buy it, it pulls back. I've seen it. I've seen 1,000. I've suffered through it. I mean, I literally kind of did it because I remember at the time I was developing like stomach problems, right? I'm stressing here. Every time I pull the trigger, I make like 15 pips or 10 pips profit. And then all of a sudden I'm like minus 30 for hours. And then I come back, and then finally it's back up to break even. I'm like, oh, and then it would drop back down minus 20 again. I'm like, oh, my stomach, oh my God, right? Has anyone been through that? I mean, you're probably so much better of a trader than I was back then. So I said, well, I need to make a change. So why don't I do this? Why don't I decide to be a bull or a bear? And then I will wait for the pullback, because I know it's going to pull back. I mean, I've just lived it for a couple of years now. Every time I buy, it turns red. Oh yeah, I should preface this. So I realized every time I bought it, it would turn red. And every time I sold it, it would turn green. So for a while I tested it. I would wait until I was 100% certain I was a bull, and then I would sell. No joke. I tested this for about a week. No joke. I would wait for everything to tell me to buy, and then I would go sell. Because it happened to me on such a regular basis, right? And then I'm like, I'm 1,000% sure it's going to fall further. Buy. Because I was so consistently wrong, right? So anyways, then I said, well, okay, I want to buy. And I get it. I feel confident in my ability to decide whether to buy or sell. So I will buy, and then I will wait for it to fall. And I started figuring out like Fibonacci and all this kind of stuff. So I'm like, okay, so if it did this, I want to buy. Well, how will I know when to buy? Oh, why don't I use a 5A cross? That's, of course, I tested about 1,000 different small moving averages, but eventually like 5 and 8, yeah, that works about right most of the time, in particular on a 15-minute chart. And all of a sudden, I made a career of buying dips in a rally. I made a career of selling rallies in a falling market, right? So I'm like, cool, man. So I started to figure that out. It was really cool. Um, when I started trading out of my home office, when I quit my job as a VC, I went from being surrounded by 300 people every day to just being lonely in the middle of the night in my little home office, working from 10 o'clock at night to 10 o'clock in the morning, California time. And I got really lonely and stuff. So I said, well, I'll start a group, right? And it's just, I'll start a group. And that's where FX Bootcamp came from. Because back in the day before I was a currency trader, I was a high tech entrepreneur. I just found it the other day. I was in these Inc. magazine's Hot 100 issue, stuff like that. Like I'm almost as successful high tech entrepreneur. I got close, but I had all these contacts in the Silicon Valley. But I was a member of like probably 15 different groups at the time, big ones and small ones, right? I supported uh, um, the Women's Entrepreneurial Forum and Women in Technology, but I was in like the Churchill Club, the California Club, the um, all kinds of engineering ones, all high tech startups, and usually back when they were small. So it was just a normal thing to say, well, I need to surround myself with other currency traders, and so I'll start a club. And there you go. Because it was so lonely, right? But that's how I got to these things. And I think once I explained it, it makes sense, right? Like when it's falling, when do I know to buy? Because I want to avoid the pain of the retracement. That's all I was trying to accomplish. Because I knew it was going up. Well, how did I know it was going up? The 2155. Well, back then I used the 2060. It doesn't matter, right? So the 2060 told me to buy, so I knew I wanted to buy it. That's easy, right? So then that's where the 5.8 came from. When in the retracement do I buy? Oh, I buy here. Oh, I buy here. Oh, I buy here. Oh, I buy here. How awesome is that, right? So I hope you appreciate the history lesson. Sometimes these things help it click, right? That these are not just magic numbers or numbers I made up. That I did put in blood, sweat, and tears for years, right? It matters, right? There's humanity behind these candles. Okay, so you have to ask yourself, are you a bull or a bear? Mickey, how do you tell if the retracement's over? So how I describe it in the book, and I still have it here, kind of like having it around now, is a 618 is a great retracement. 786 tells me it's going to double top. Anything more than a 786 is not a reversal. It's not a retracement. It's a reversal. Boom. Okay. Cool. What is the time? Someone's ringing my front doorbell. I told him not to. I'm having a load of lumber delivered. Do I use fibs for anything else? What else do I use fibs for besides retracements? They're a trend tool. This is tradethenews.com, by the way. I've been using them for over 10 years.
Next autos expected 0.4%. Next autos and gas expected 0.3%. Let's get Canada Terranet index for February at the same time.
And Mickey, oscillators would end up telling you the exact same thing. A moving average combination would tell you the exact same things. The most important thing is you see red candles and you're waiting to buy. Everything else is just almost irrelevant. So I pick one, oscillators, moving averages, or Fibonacci, and master it. Do it exclusively for an entire year until you could write a book on Fibonacci trading. But don't be mediocre at everything. Be a master of one.
PPI 0.2% is what expected. Core at 0.2% is in line with expectation. Year-over-year PPI 2.8% in line. And
down.
Core at 2.5% is 1/10 lower than expected. Retail sales of minus at 0.1% is 4/10 lower than expected on the headline. X autos at 0.2%, 2/10 lower than expected. And X autos and gas at 0.3% is in line with expectations. The advanced retail sales headline number in the prior month was revised up 2/10 minus 0.1%.
All right. So do you think that's going to force the Fed to jack up interest rates more quickly? So what that means is that's good. We have inflation. 2.2 is good, by the way, but it's not crazy out of control. Okay. And then you can drop something down here if you wanted. Hope for the best. Where do you want to take this? Gives us some eye candy. Oh, I think I hear the lumber. Okay, let's take a look around the world. Instead of isolating euro, let's just isolate the dollar. Aussie dollar up, but right into resistance. Kiwi dollar up. USD Swiss franc down. USD yen down. USD CAD down. Dollar weakness across the board. What do you think about that? Could end here, right? But be careful. But with the news, you'd hope this would launch to R2. But you never can tell. Sure feels good if you bought this a week ago. Take a look at the yens. These are funny, right? Remember this? This is funny. You remember? It was up, 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 and up, and up, and up, and up. I'm like, well, if you're a bear, that's clearly a sell. I don't know what else to say. If you're a bear, that's where you'd sell. That's that. I mean, it looked silly when I drew this down arrow, didn't it? Right? And to really re-emphasize our conversation, we talked about it in here, rallying and then double bottoming. Who remembers that? We talked about it here in the consolidation. Chuck says yes. Anybody else? So you're telling me we discussed this pattern 2 weeks in advance? We had a trade plan that spanned 2 weeks? Well, that's crazy. That's crazy. What are you talking about? You can't do that. That's crazy. I liked you. You're crazy. Who does that? Namaste, Tommy. Well, what are we going to do about that? So I hope I know some of you take notes and stuff, because like predictions and stuff are worthless and pointless. I hope you listen to my explanations why I think these things and how I get to my logic and conclusions. I think is important more than the call, right? So I hope you're taking the opportunity to learn. I fear that for most people, this is like watching television, logging into the webinars every day. Oh, I got to watch this show about a trader. He's really good. And then you walk away and you're no better of a trader. I hope you're better of a trader, but that means you need to be doing the work, right? And you need to take away learning points, right? And if you can afford it, take one of the courses at boot camp or something. But you need to do the work. You need to pull something out and study it hard, right? So like on in class, like I'm thinking one of my classes, for example, the professor in 1 hour, and there's 3 hours a week. There's 3 classes a week, Monday, Wednesday, and Friday. This professor, again, a senior economist at the Fed, in his hour, just does an absolute total data dump on you. It's ridiculous. And I know macroeconomics. It's a macroeconomics class. It's a mind level of macroeconomics every hour you're with this guy. Boom, boom, boom. And it's just like tsunami. By the time you half understand what he covered last 3 lectures, all of a sudden it's another lecture on top of that, and then another one, and then another one, and it's just more information. It's like, oh my God. So it's expected after lecture that you spend 5 or 6 hours studying. And maybe you can keep up, but the average grade on the first midterm was 53%. You got to keep up. You got to fight. Well, what about, but that's the average, right? And then there are others that are above average. What makes them above average? Well, I think 3 or 4 of the holes actually knew this stuff from another class. Granted, but that's part of the fat tail stuff. Some people are failing. Some people got 100%. But what about the right side of the bell curve, not including the tail? Where are the ones that are getting 75%? When everyone else is getting 50%. Not the 100% guys. What about the solid A students? They work their ass off in between class. Yes. What if every webinar I do means you do 4 hours of study as a currency trader? And you're like, dude, Wayne, that's like 20 hours a week. I spend more than 20 hours a week at Harvard. So that's all I'm asking you to do is keep up. Get to that you in 5 years. Get to that you in 10 years. You know how amazing you're going to be? In 5 years, I'll have a master's degree from Harvard University. That's awesome. Where are you going to be in 5 years? You should be an awesome trader in 5 years. But it's going to take you 20 hours a week for the next 5 years. But the upside is I get a piece of paper. Hey, look at me. I'm a Harvard a-hole, right? What do you get? Success, dreams fulfilled, redefining who you are as a person, and a boat, right? I mean, that's where you need to go. So you need to take these goals, okay, and connect them with your future self. But you have to believe in your future self. You have to see yourself 5 years from now as a phenomenal currency trader. And then you have to have action items, specific, measurable, attainable, realistic, and timely action items attached to this vision for yourself so that you have absolute total buy-in. And then you need to fight hard, right? The tenacity and focus and drive to achieve is going to determine whether you're stuck in mediocrity forever or you fulfill your dreams and have to create new ones that you can't even imagine right now. But you're not going to achieve it because you're good enough, you're smart enough, and gosh darn people like you. You're going to get there because you have a sickening, ridiculous work ethic. That's it. Drop the mic. Exit stage left. See you tomorrow. Thanks for being on my team. I'll see you tomorrow and the next day, and the next day, and the next day, and the next day, and the next day. Cheers.